Most business owners don't have a revenue problem, they have a visibility problem. And what they can't see is costing them in profits. In this office hours, I'm going to show you how your expenses can actually teach you how to lead your business more clearly, more confidently, business owners don't and more profitably. They have a visibility because when you understand the signals inside your spending, you stop reacting and start leading with control. I'm going to show you how let's get into it. Can actually teach you how to lead your business more clearly. All right, so today we're really talking about there are 7 financial truths that every business owner should know. And this is really going to give you the practical insights you need in order to transform how you manage your company's finances, and ultimately how you actually scale and build a sustainable business. There are a lot more, but we're just going to tackle 7 so you can get the understanding that you need. First thing we're talking about is that real-time visibility creates real-time control. What does that mean? That means many of our owners, many of our businesses are really managing their finances in such a way that they are more reactive than they are proactive. Oftentimes you're getting your financials maybe a month in, few weeks after the month has closed, and you have no insight into what had happened until you actually see it. But if you had real-time data, you would essentially know what is coming. You have a better expectation of what's coming. Now, that's no way to really manage your business if you're always lagging behind. It's literally like this stream that I'm doing. When I talk, my voice hits the ears a few seconds later. It's disorienting. It makes you focus on where you've been versus where you're going. And it really doesn't allow you to plan ahead in a way that's going to affect your past. And how do we do that from a financial standpoint? Is by having real-time control of those finances. When you do so, you have a few questions that you can answer. You can answer questions you can answer questions without even being prompted, like what was your major spend like last month versus last week or even yesterday. Second thing is budgets are boundaries, not suggestions. Oftentimes when we think of budgets, we think of them as like walls, right? And they are walls. In fact, they are the most important walls in the business because they are actively protecting your profit plan. When we set budgets, you really want to be as conservative as you can, because when you add cushions through to your numbers, it allows there to be flexibility. You ever fit into a shirt and you're like, oh man, I'm fitting into a small shirt. I used to always fit into a small shirt, and you're like, okay, I fit into it. But once you put it on, the shirt is so tight. It's like you can't even wiggle. There's no movement. It's the same way if you had a tight budget. So you know that when you go up in size and you put on a medium size, there's a bit more flexibility, and it actually allows you to operate more comfortably. It's the same way in business. Your budget ought to fit your physique, fit around your business in such a way that it allows the business to be flexible without compromising the look. If you're not honoring your budget, honestly, like you're gambling with the margins. You're actually gambling with that profit plan that we set at the beginning of the year, or even at the beginning of the month. There are ways to have a flexible budget that is real time and that actually provides controls for everyone, despite whether or not they're looking at the budget every day or not. They can simply spend confidently, knowing that there are controls in place that prevent them from going across the budget. The third thing is cluttered spending equals cloudy thinking. When I think of this, I think of a bedroom, my living room. Every day, my living room gets scattered. It actually gets cluttered. Why? It's not because of me. I'm a pretty organized guy, but I recently became a dad, and every time my daughter walks into that room, she decides that organization does not matter. She finds her books, her toys, anything that's on the floor, and simply scatters, scatters, scatters. So let's say during her nap time, when I'm trying to actually get some work done, open up my laptop and I'm trying to get some work done. But when I look around me, it's like this place is so scattered. And because of my physical environment is so scattered, it gets hard to actually think. So my thinking, I can't even be as productive as I want it because everything around me is cluttered. It's the same way in your business. It's the same way in your finances. Because when spending is scattered, is disconnected, is uncoordinated, it's very hard to actually lead and do the job, right? So cleaning up the expenses is a direct way for you to lead better because now you have clarity. It doesn't seem like you're always leading in a storm, putting out fires. You actually can take a step back, sit down, and actually lead intentionally. When we experience cluttered spending, there's a phrase that we always hear, that we might hear from owners who seemingly are successful but don't really feel like it. They say, I feel broke. And I look at their finances and they're making a lot on the top end revenue, they're making a lot, but they still personally feel broke. And oftentimes that feeling, that statement, it's really a statement that's saying the underlying heart of it is, I don't know where it is. They just simply don't know where the money is going and have confidence to know that they made it go there on purpose. That's where you have owners who may be very profitable on paper, but when they look at their bank account, it's like they say, whoa, where did all that go? I didn't see that money get into my account. Often it's because the spending is cluttered. There's no rhyme, reason. It's just kind of things are just happening so fast. All you're doing is surviving by swiping your card. So by the time at the end of the day, the results may even shock you. The fourth is this truth. You don't need to cut cost, not necessarily. You just need to align them properly. Cutting costs cutting costs is a strategy to improve your profitability, but it's important to do an audit of your expenses first, of your vendors first, to ask the question, are these costs strategic? Are these costs contributing to the overall vision and direction of the company? Or are these actually costs that are extra, unnecessary? You won't know until you have actually done that audit, done that review, compare the vendors side by side and see which one is actually serving the goals of the business. This is a process that's often done after the fact, done months after, maybe even years later, because you've been accumulating cost, seemingly software subscriptions, things here and there, and over time, your expenses are essentially bloated. I would recommend you do this at least quarterly. You can even do it monthly in your monthly financials review, but at least on a quarterly basis because trimming the fat keeps you fit. Going for your quarterly exercise, you should probably go on 3 times a week at least, but send your business to a quarterly exercise program in which the fat is trimmed and the expenses become more efficient. Now, ways that you can determine if the spends or your costs are relevant, or even if you're getting the best deal, you can even compare vendors to vendors, renegotiate prices from one vendor to the next vendor, see if there are ways for consolidation of those costs. And you'll be surprised at what you're able to find. Oftentimes, even within our firm, we find there's a lot of overlap between capabilities, especially in this day and age when every software wants to offer every single thing. This allows you to be more intentional with your spend, with your software, even honestly, even with your people. All your costs are really broken down into two major things: people and platforms. Are your people redundant? Are your people Are there certain roles that are overlapping? This is also in your consideration for cutting costs. And what about number 6? Number 6 is actually number 5. That's where we are. Number 5 is a question. Is a question you should be answering truthfully. And it's for my project-based businesses. The question is this: is cash from one project funding the next without you realizing? This right here is one of the biggest problems from all of our event production and AV companies that we serve, and all of you project-based businesses, is that carryover and that bleed from project to project to project. It's a symptom of what is the word? Not having clarity. If you can tell me that word, I don't know, but it's a symptom of not having clarity in your numbers. Because there's two things you need to be mindful of: the profits of one business, and then the cash output from the profits from one project and the cash output from that same project. If you're not careful, you start one project, you start another project simultaneously. Maybe you've started 5 in a row. The deposits from one project are used to jumpstart the second project. The deposit from project number 2 is used to jumpstart project number 3, and so on and so forth. This is extremely risky. Why? Is because you are essentially creating for yourself your own internal Ponzi scheme. You are literally building up a snowball that you have to keep running from every single project. Now, because of the pace of the business, you're just out there trying to get business, do projects, right? And fulfill on those things. But you don't have that real-time data like we talked about, the real-time numbers that are going to help you see and evaluate the profitability by project. If your underlying projects are worth it, are producing what they need to do, then overall your business is likely going to be healthy. So you need to start seeing each of your projects more like a financial asset that you're taking care of than just individual task. That takes us to number 6. Your numbers should teach you something every time you look at them. Literally, every time you look at your numbers, you should be learning something more about your business, learning something more about what is to do next. Because raw data is useless if you're not able to get insight out of them. So this informs how we actually put together our data, our financials, how we actually visualize it, how we compile our dashboards, so that you can actually learn something from what you're seeing. So it's a question about how you categorizing your spending. How is your bookkeeper actually organizing? Does your bookkeeper understand that they need to organize your financials in an understandable way? So my question to you is, when is the last time you looked at your financials and it sparked a change? It actually inspires you to take some action. And that brings us to 7. Resilient companies, they don't panic. They don't react. In fact, they prepare. They prepare by using forecast, scenario planning, so that they already know, if A were to happen, we respond this way. If B were to happen, we respond this way. If C were to happen, we will respond this way. By shifting your focus in your business finances from the past to the future, you're now running your business with your head up. Have you ever tried to drive your car by looking in the rear view mirror while driving forward? It doesn't really work. You have a high likelihood of crashing and a low likelihood of not crashing, right? So by forecasting and scenario planning, you're able to be stable in an environment that may seemingly seem volatile. So My final encouragement to you is this: don't just track your expenses to file reports. Don't track your expenses simply to file your taxes. Track them in order to build clarity in your business. Improve your expense management to improve the clarity in your business, because the clearer you can view your business, its performance, the more confident you can make some decisions. And confident decisions actually create consistent profit. Let me say that again. Confident decisions create consistent profits. Very repeatable. All right. So that's it for today. We're gonna now open the floor for questions, and shift to our chat. I hope you learned something for that. I learned some things. As I am talking, I also learned some things, but I'm going to check the questions, see if anybody's in the chat or anything. And, okay, we have someone in our Zoom room. Is it Danielle? Can you hear me, Danielle? Oh, no. Can you hear me now, Danielle? It's cool. It's cool. Cool. Yeah, I was cooking. It's streamed on YouTube, so maybe you'll be able to see that as well. Uh, but I take it that you joined in because you had a direct question. Mm-hmm. Oh, okay. Awesome. Absolutely. A couple of disclaimers. You are being streamed publicly, so definitely want to let you know that. Um, and let's break it down to some specific questions that we can ask. You're preparing for an audit, right? Your nonprofit, that's a normal requirement, especially if you're going after grants. Tell me a bit more about where you currently are in your financial management. Do you have a bookkeeper? Do you have books in place? Do you manage it yourself, or you have a treasurer? Tell me about what that looks like. Mm, yeah, perfect. Hmm. Yeah. Yeah, so these are first of all, thank you for being so candid and clear. You answered a lot of questions I was already going to ask. One of the things that we see with nonprofits is sometimes they are looking for the grants and the audit is a surprise to them. They're like, "Oh, snap. I got to get an audit." And so there's a whole journey to become audit ready, and we call that audit readiness. And so it seems like you have an accounting team that's going to support you. It also seems like you have a system that you're able to prove those expenses through the receipt capture, as well as grant requirements. So those things. Now, do you know if your accountants record your books on the accrual basis of accounting or cash basis, or do you know the difference? Perfect. So you are perfectly ready to actually go through that audit. We're gonna schedule some time. Send me pinging your in the chat your email address and contact. We'll schedule some official time to talk through because we absolutely can support you in that. Um, for context, we've been doing audits for a number of years now, mostly for nonprofits as well as some small for-profit companies. They have different reasons. Maybe some is for grant reasons, other are for loan or board of director reasons. But what we like to evaluate and see when we're doing that audit is just the quality of your financials. We're evaluating and testing the assets that are on the books, the liabilities that are on the books. Does the nonprofit's not equity, but do the net assets section in the financial statement make sense? What's super important is how you're tracking program costs versus overall management costs. If you have a system to do that, that's going to be super helpful and get you that's going to get you further very fast. It's like, okay, they already know how to secure each cost and track it per project like that, or program rather. The other thing you want to think about, the financial audit is not just the financial statements, but about the controls or the organization around that. So it's better to have segregations of duties. So you have a bookkeeper who's doing that. The financials come to you. The person who's signing and approving the checks. It's not the person who's cashing them or paying them out. Now it's not. Yeah. So it's not. That's you. So it's not a make or break situation, but it is, as you improve in your controls within the organization, you improve the um, our opinion on those controls. Now, in the audit, based off of your size, we're probably not going to be making an opinion on the actual controls, more so giving you advice on these are things that you can do better. But as long as the quality of the financials are good, that means accuracy. Things are accurate. Things are complete. So you've added all the expenses, all the bills, things what you're entitled to as revenue. You've included that. Um, any liabilities are still all present, right? There's certain assertions that we review your financials based off of. Um, Audit processes could take 30 to 60 days usually. I would even say 60 as a minimum because there's a lot of diagnosing, testing, and then proving, and then reporting. And this whole process is regulated by our own regulatory bodies. As you know regulations very well. You're a nonprofit, right? Um, so that's the whole process. Is really straightforward like that. Did you have any other questions, maybe about the audit, or maybe just about running the nonprofit, or that you may have had? Okay. So what we would do is that's fine. What we'll do is you'll stay in the room. For context, I'm gonna remove you off of the visuals on the stream, which I just did now, and I'll continue because I've collected a few questions that I do want to walk through, and maybe you might find some value from them. No problem. No problem. All right. So I got the questions in front of me. Back to you, audience. How you doing? Uh, so I got some questions that I think are really interesting because they're coming from you. So let's do it. So here's one question. is I'm making money. So why does it feel like there's never enough? Man, I empathize. I really do with that question because oftentimes we are in business and we're trying to make more money in our businesses, but it always feels like we're always chasing that carrot. We're never actually getting to that point where we're feeling like, oh, okay, it's done, because there's always something else, something new. From a CFO's perspective, one thing that I can tell you is that money, this question is really talking about the difference between the profits that you're generating and what you're actually seeing in your bank account. That's really where I see when I hear owners ask this question. They're on a month to month basis, they're winning contracts, they are fulfilling different contracts, and they've done that for 12 months. But by the time they get to December or maybe even January, it says their books say they're profitable, but their bank statement looks a little light. It's like there's no way I earned that we made 100K in profit. Like that's no way. There's no way I generated 700,000 in revenue or 1 million in revenue. I can tell you it's probably because you haven't been tracking it. It's so funny that there's this quote that says we underestimate what we're able to accomplish in a day, and wait, well, yeah, we underestimate what we're able to accomplish. I forget what it is. You know what I'm saying? We underestimate what we're able to do in a day, and we overestimate what we're able to do maybe in a year, or vice versa. At the end of the day, what I'm saying is that by the end, you don't know how far you're actually running unless you're actually tracking it. But if you take your eyes off it for 12 months, by the time you get to the 12th month, everything's going to be a surprise to you, whether or not you're profitable or a loss, whether or not that profit leads to even a big tax bill, which is one of the reasons why I encourage you and challenge you to stop looking in the past and start predicting for the future with your financials. So, why you feel like you're broke is because you don't understand the relationship of profits and cash. Did you know that every time you swipe your card doesn't mean you've swiped for an expense, or every time money goes out of your bank account, it doesn't mean that it's specifically an expense that drives or is affecting profit. Sometimes there are other things that affect cash that are not profit, especially if you are running your books on the accrual basis. What are some of those things? Payments of debt, payments of credit cards, using your credit cards, investing into your business through like an owner's investments, owners taking cash out of the business for personal purposes, accounts receivables collection time which is delayed, accounts payables payout times that are delayed. So you can see all those elements are actually changing what your expectation is from profits and how it actually leads to cash. You can send out an invoice today and say the invoice is this is a 50K invoice. I'm sending it out and I'm expecting my client to pay it. If you're on the accrual basis, your accounts will show you have revenue of that 50K. But let's say it took 60 days or even 6 months for that person or that client to pay it. Profit still shows, or profit and loss statement still shows that 50K, but your bank account is light. So how do you affect that? You can probably, send your goons, send your minions to go and collect, hire a collection agency, change your agreements with clients, collect card information up front. Do some of those things to speed up the cash flow as it comes into the business. You can do the same is in reverse when you're dealing with bills and accounts payable, right? Your vendors could be sending goons and collection agents to you, but you can renegotiate payment terms with your vendors to extend it as far as you can, if possible. You could use credit to pay the vendors. So now your payments are always going to be set to your payment, you might to your schedule. Maybe you have to pay some interest to allow for that. There are services that do allow for that so that your vendors aren't chasing you and now you're just dealing with a credit agency. So those are reasons why there's a difference between profit and cash. And if you are tracking that as often as you should, which I recommend to be on a monthly basis, I recommend you to evaluating all of these, the cash and profit dissonance every month. You can even do it every week if you're working with a project and you're tight on your budget, right? So that 12 months later, you're not surprised looking for trying to answer the question, wait, I earned this profit, this was my revenue, and it doesn't show on my bank account. I feel like I'm making money, but it doesn't feel like it's enough. It's because you don't actually have the clarity. All right, let's go to another question. Okay, what should I be looking at monthly to make smarter decisions? I love this question because it's a similar question that I often get from owners who just find, people come to your CPA and sometimes they come to their CPA as like the person with all the solutions. They come and say, "Hey Zoe, I have a business. What is the best thing that I can do in order to grow my business?" I simply take a step back. They don't even realize how the depth of that question. Have you ever walked into a candy store? Maybe you have it, even a virtual candy store. Let's just say Amazon. You click on Amazon and you actually at the homepage, you are bombarded with so many options of purchasing of an item. You probably came in there looking for a pack of batteries, but then you're in the home section. Now you're like, oh man, which one? What can I buy? What can I buy? And so imagine asking someone, what's the best thing I can buy right now to satisfy all my problems? It's a really difficult question because we haven't gotten specific. We don't even know you, right? I do think that people come to CPAs and CFOs as we are because we often have a framework that we use to answer those difficult questions. And I'm going to show you that framework right now. We talked about this actually, I believe it was last week or so. But when you ask that question, like what should I be looking at every month to make smarter decisions? The heart of that question to me in my filter says, what can I do? And when I do that thing, what should I do? Those are the two components of that question. What can I do inherently is a cash flow question. Because, why do I say that? It's because cash is literally what we call the lifeblood of your business. It dictates all of your present and future activities. Without cash, you can't do anything from a business financial standpoint. You can't produce a thing, buy a thing, hire a person. You can't really do anything if you had no cash. In that example that I just mentioned, even if you were profitable and you sent an invoice, if you don't have cash, you can't even satisfy you can't fulfill on that invoice. You can't do anything until that cash actually comes in. So the first component of that bigger question is, what can I do? Which is a cash flow question. So when you're asking, how can I make smarter decisions? You should be looking on a monthly basis at your cash flow. You should be projecting on a monthly basis, even as far out as a year, the flow of your cash. What are you looking for? You're looking for your peaks and you're looking for your valleys. Your peaks are when your cash increases, your valleys are when it goes down. And what you're identifying is what is the average cash flow, in and outs, my in and outs. When does that actually happen? How high does it go? How low? What is the magnitude of it? That tells you you're able to answer a lot of questions simply by observing that. When can I execute on an idea? When is the best time to spend? At what part in the year do we have to look for financing? At what part in the year do we have to consider downsizing our team? At what part in the year do we have to increase our revenue by increasing our business development, our client acquisition? How much can we actually spend on acquiring a new client? How far, if you're a nonprofit, how far will this grant take us or fund? How many months or years will this grant fund in programming? Right? And when are those cash deposits actually going to hit the account? Those are all the questions. All of that is the questions that come out of like, what can you do? Cash flow. Now, to round it up, you said you want to make smart decisions, not just any decision. Cash tells you you can do any of these things. All cash flow is telling you is when you log into Amazon, how much credit do I have to use? What is my limits? Cool. Now you know you can do all this stuff. To round out your decisions and actually make them smart, that is actually a question about profitability, profit. Because the real question of the next question, which I said was, should you do it, is a question about, is it even worth it to do it? And so that's a profit question. It follows that you're going to be asking, did the thing that I could do that was available for me to do, did it actually lead to a profit? The action that I took with the vast amount of cash that I had, did it actually lead to a profit? And the profit's going to tell you whether or not it's worth it. Now, profit is an interesting concept. From a financial standpoint, we understand what profit is. Income in, revenue in, minus your expenses, gives you your profit, the leftover. The funny thing is that that's the elementary understanding of profit. How we understand, I'm going to take you a step up and show you that profit is not a financial metric in and of itself. Profit is a financial result, as well as an energy result. It's qualitative results. When you evaluate your profits, ultimately you're trying to figure out, was the effort in earning that profit even worth it? And that's when we start talking about the qualitative results. Earning that profit, what did it do to your company culture? What did it do to your brand recognition? What did it do to your employee morale, your team morale? What did it do to your reputation in the marketplace? What did it do to you as the owner and the leader pursuing that profit? Did it add to your level of fulfillment? Did earning this profit, did it connect to the overall mission of the company? Oftentimes we don't think about that other side of the word profit because we're mostly trying to get to just that number down low. Oh, the bottom line, profit, which is good. I'm not saying it's good. I'm not saying it's bad. I'm saying that profit is a part of the overall equation of, is it worth it? I want you to ask yourself, what are the qualitative components of worth that should be attached to the word profit, to my profit number? This is a reason why we do a lot of goal setting and digging deep to understand where you actually are going as a business. And as an owner, oftentimes is the business owner who's setting the vision for the business. This is where we're trying to go. This is why the profits from this business are significant. So we set goals for those profits. Is it that you want to, retire in Maui on the beach? Is it that you want to fund social causes that are really important to you? You want to give back to your local church in a more significant way? Maybe you want to establish, generational wealth for your children where they're not fighting, grabbing breadcrumbs. They're not fighting as hard as maybe you did in your life. Those are also components of, is it worth it? That question, super important question, right? Because what you sacrifice from a qualitative perspective to earn those profits is just as important as what you gain from getting the financial profit. Cool. All right. So you can tell that's a deep question. So that's why we do a lot of soul searching in our CFO process, so we can match the financials to something of significance. Else, it isn't really worth it, you know? Else, we miss out on the very thing we're all looking for our souls, fulfillment. Cool. All right. Went a little deep, but it's fine. That's what your CFO does. It's a financial expert with an empathetic, and your empathetic coach, your empathy coach. All right, I'm looking at another question. And here's one. I think this is a simple question, but it says, how can I tell if the tool, I think they're mentioning software, subscription, or vendor is even worth what we're paying? Ooh, that's a good question. So it sounds like to me you have many systems, many softwares, or you have systems, softwares, and vendors, but you don't really have a process of evaluating them. Honestly, it's very simple. Do they meet your needs? How valuable are the services that they provide to you? And are you willing to pay it? Now, this is actually a cool question because it's making me think of um, a concept that we like to teach here, in that how you spend is how you will earn. How you spend is how you will sell. That's the word, right? So we'll get there. So one way that you can evaluate whether or not it's paying you is just whether or not it's worth it for you to pay is just observing the needs that it has. Is it actually fulfilling a specific need that's driving the growth of the business? That's an evaluation of different things. You got to understand what is actually important for your business. It's a priority process. Does the cost justify the output? Does the cost justify the results that you're receiving from this vendor, subscription, or tool? How often are you using it? That's a part of it. Are there other tools within my tech stack or within my tool set that also do the same thing in a similar fashion, in a greater fashion, or maybe in a lesser fashion? If the business didn't have this completely, this one item, what would happen? What's the worst case scenario? What's the best case scenario? Would my business be able to adapt? Would we still be able to fulfill at the level that we are and complete, all of our tasks as we expect? So those are ways you can just simply evaluate, and you want to do that with all your expenses regularly. I just mentioned that you should do that maybe on a monthly basis, definitely on a quarterly basis at least. But if you're looking for quick wins in the expense department, you might review it on a weekly basis. Side note, do not forget about your yearly subscriptions. You know, those companies that say, oh, you can save 15% because if you just purchase the subscription on an annual basis. That is a good way to save. Let me tell you, that's a great way to save some dollars on the software costs. However, it's also a great way to forget that you're actually on these subscriptions. I can't tell you how many times I've seen subscriptions that just stay dormant, mostly because you're not seeing them in your inbox on a month to month basis. You really only see it annually, and so it's easily forgotten. And you don't even think about it in your in your profit and loss statement, because many of us are not doing accrual accounting to spread across that one-time annual payment across every month. We do that for accrual basis accounting. Why do we? Because it just provides better clarity. Now, it's a bit more work sometimes. If you have the right tools, you can make it easier. But it just allows us to say, okay, we can take advantage of those 15% discounts through annual subscriptions, but we're still able to track our monthly expenses properly. Now, if you don't want to do that, then you just want to make sure you have some alerts or some way to know, okay, every year at this month, this is the cash that's needed to actually purchase those softwares, or those expenses are coming due. All right, now back to the question, to the other part of this question that I wanted to talk about how you spend dictates how you sell. What do I mean by that? I mean that the framework, how you determine something is worth to buy, is the same attitude you're going to take in the marketplace when you're determining on the value of the thing that you're selling. In fact, that same attitude of how you buy things is the same attitude for when you sell it, and it will come across even from the people who are trying to buy from you. So, meaning, if your primary criteria on buying a thing is the cost, is it the cheapest? Can I buy it? Can I get it for free? If that's your framework, if that's the top priority, top criteria, and then below that, does it solve my problem? Below that, is it valuable? Below that, are there other things connected to it? But if the top priority is cost, I can tell you, you're probably selling your product that you actually are selling, your service or product, at a discounted rate, at a cheap rate. You probably see it mentally as something of lesser value. It's because you're already competing on cost in your purchasing decisions, but you inherently take that into your selling decisions. That means you're probably more likely to discount your costs when someone asks for a discount. You're probably more likely to offer an average rate or compete on price versus commit to a premium price. Now, can you do both? Sure. Yes, you can. I'm just saying that be mindful of your mentality and what you think. Be mindful of the criteria in which you buy. Let's flip the script. Let's say your top criteria was not cost. Let's say cost was actually lower on the totem pole, but what actually was higher, or number one, was, does it solve my problem? That's the value question. Is it valuable to me? Second question, do I have a strong enough cash position to absorb or to re-earn the cost? Maybe the third question is, do I have a business able to generate revenue to pay for the thing that I actually need? Those are all three priorities that actually are above, that have come above cost. Now let's say you take those three priorities and now you use that to view the value of whatever you're selling. You'll start thinking more so, when I'm selling the thing that I'm selling, does it solve the problem of my client? That's number one priority. Is it valuable to my client? Do they care about it? Do they have the cash to actually pay for this thing at a premium price? Then am I satisfied with the cost, with the price? Then am I satisfied with the price that I'm offering? Does it fulfill the needs within my organization? Then maybe the next thing is, how does the price compare to other competitors? Do you see the difference between those mindsets, and how one mindset and how you spend can directly impact how you actually sell and how you price position your product or your service? So I want you to think about that, because that's going to dictate how you decide to go and cut cost, how you decide to go and review your tools, your subscriptions, your vendors, your people, your employees, your contractors. Because if you have a shifted perspective saying, okay, these things value is actually more valuable than cost, you're going to make some different decisions. You're going to be making decisions that are actually going to serve the scale potential of your business, not simply short term cost. You're probably going to start looking at things a little bit with a little bit longer horizon. You're going to start delaying satisfaction. Okay, we want this. We're going to figure out this cost. You're going to be asking yourself, challenging yourself more. We're going to absorb and figure out this cost because the value that we're getting from X is actually laying the foundation for the business to scale. This is a serious problem often for early stage entrepreneurs who also are wearing 12, 13, 14 hats in the business. It's sometimes hard to take off a hat and delegate a role or responsibility because it comes with added expenses. So if your primary criteria for spending a thing was the cost, it'll take you so much longer to actually delegate and hire to position your business to scale. You actually will be holding back the business simply because you have a certain perspective about money, about spending. You don't spend based off value, you spend based off cost. So you would never hire. Why would you hire? You're actually saving money by not hiring. But you don't realize you're spending it up and you're spending it in your time and in your stress. You're spending it other ways. Regardless if you spend it by money, you're going to spend it. Hmm. Yeah, sometimes when I'm answering these questions, I'm not just talking to the audience. I'm God is using me to talk to myself, because that's a real thing. We find ourselves in an issue. We're trying to grow, but we're so tight fisted with our cash that we don't actually want to do the things that will help us to grow, that will help us to scale. We're not willing to sacrifice the short term hurt of that expense for the long term growth opportunity. Cool. All right, we got just a few minutes left. So maybe I'll just answer one more question and I won't take too long so that we can end on a positive note. Or maybe that was a positive note. We'll see. All right, someone says, I'm nervous to hire. How do I know if we can actually afford it? So this goes back to a lot of the other questions. I think that there's only two things that a CFO is really helping. Well, three things a CFO is going to help you with, and this falls in line with it. We just mentioned it. Is helping you to answer the question of what can I do? Cash flow question. Asking you the question, once I do that, is it worth it? Should I do it? Profit question. The third thing your CFO is going to help you do is actually take the action to do it. Did you know it's easier to make the decisions, harder to actually take the action? It's easy to think about it. It's easy to think strategically. It's actually way harder to actually execute. It's so hard to execute. If you remember the transformation process that I talk about, that is I believe it's a 5-step process. Exposure leads to knowledge. Knowledge leads to wisdom. Wisdom leads to understanding. Understanding leads to revelation. Strategic thinking often is in is within knowledge and wisdom. What is knowledge? Knowledge is the accumulation of truth. You've been exposed to many, sources of information. Knowledge is the process of accumulating those truths and putting them in your bag. Wisdom is applicable is practical application. Some define it as life skill, the skill to do a thing. So wisdom is applied knowledge. And what comes after applied knowledge is understanding. So I said that it's easier to accumulate the knowledge than it actually is to get understanding or to do it, because wisdom is the gap to understanding, and it actually takes physical action to actually execute. You ever hear someone who's always has you ever have that friend who has all the ideas, all the suggestions, all the, man, if it were me, I'd do it this way. But every time you see them month after month, they don't do anything. They're really, I like to say, they're just all talk, no play. All talk, no action. They're they're in the stands criticizing, yelling, giving their opinion, but they never actually go out on the floor and actually play the game. They actually never are able to get to that level of understanding, because what stops them from getting there is applied knowledge, applied truth, wisdom. Now I don't even know why I went into that tangent. I totally forgot the question I'm answering. Oh, how do I know if we can actually afford it? Oh yeah, because we're asking those two questions. What can I do, and is it even worth it? And you really, and then the third thing at CFO, yes, I understand it now. The third thing the CFO is going to do is they are your action coach. We are your action coach, because it takes so much effort to actually do the thing that you have already thought about and you have already, strategized about. Staying true to the action, accountability, uh, inspiration to help you stay the course, because the action is harder than the actual thinking. The thinking is essential. In fact, many get paid high dollars just to do the thinking. But what's going to lead to your transformation is the action, is the doing, which is my job to help you do it. Go and do it, empower you to do it. And as you begin to do it, like I said, you receive understanding as a byproduct. Now, I said it's the transformation process, because when you keep doing that, when your CFO has been coaching you with action, and you get understanding and you start doing that often, you know what comes next after understanding? Now is revelation. Revelation sets the stage for you to transcend into your transformation. Revelation is you understanding, you now, it's like it's creativity. That's really what it is. You start to see seemingly disconnected things are seemingly connected, simply because your understanding has evolved to revelation. In fact, I believe that revelation comes from God. Creativity comes from God. Man, when you go through that cycle time and time again, what happens is that you finally, one day, you look back and you realize, wow, I've been completely transformed. Your mindset, your action set, your skill set, your tool sets completely transformed, simply because you started taking action. And that's why we're in business. We're not here just to talk. We're not here just to share cool things. We actually want you to do things with the cool things, so you get understanding of those great things, get revelation, and then have transformation stories. Awesome. Yep. So that's pretty much it. I think that was a great office hours. Like, comment, subscribe to the ZFO Insider. We got a newsletter if you would like to see a CFO in your inbox every week. I believe it's every Thursday, but we're going to be providing so much value in those newsletters, just as well as we're providing value on YouTube. So please tell a friend if this was valuable to you. Share with a friend. I think that that is the best way you can be a good friend, especially your business owners. If you would like to explore our services or what we're able to do, the links are going to be in the channel box or description. Yeah, we're a CFO service company that works with AV and event production companies to master their cash flow and their expense management. And we're looking to just implement real scalable business principles. All right. All right. So that's it for today. We'll see you next week.